What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today, it's official. It's 2025, bro. It's crazy to me to think that we are a quarter of the way to the year 2100. All right, we are living in the future, bro. You know what I mean? But Happy New Year. I hope you had a safe and fun time. 2025 is going to be a big year for us, man. It's a year of opportunity. It's going to be a year of big change for a lot of people, bro, for better or for worse. Things are going to change, all right? Now, I wanted to kick this quick video out here to you and talk to you about Monday and Tuesday and how we use Monday and Tuesday's price action to trade as the week progresses, all right? Now, Monday is day one of a new timing cycle, all right? Monday starts off the new week. When Monday trades, Monday gives us a high and a low. That high and low on Monday is our opening range of the week. And a lot of the times on Tuesday, like we're looking at right now, Tuesday might stay inside, but a lot of the times Tuesday will expand Monday's range to one side or the other, just sort of giving us more space, more room to work within as the week progresses, right? So when Monday and Tuesday trade, we have a high and we have a low in place. That high and low forms a box, okay? And that's what I'm trying to show you with this slide. We have a high Monday, low on Monday, project that out, and we have a box. Price is always inside of a box, all right? Now, inside of this range, this is what Stacy calls the Fugazi or the matrix, right? Traders will try to trade inside of this range and get chopped up a lot of the times. They'll be, counting pushes, looking for liquidity sweeps, calling out trends, calling out breaks in structure, change in character, all of these things. But really, we're still inside, and price can do whatever it wants. It can go up and down, spin around in circles, and it won't change anything according to our higher time frame outlook on things, all right? Because no level has been broken, all right? Now, we want to trade at the extremes of the market. Remember, we only enter the market from three places, three levels, all right? The high of the day, the low of the day, or the previous day's closing price, okay? Or the high of the week, the low of the week, or the previous week's closing price. And the reason for this, okay, is because even though we're on a 5-minute chart, or even though we're on a 1-minute chart looking to take a trade, we are not trying to trade a 1-minute or a 5-minute setup, okay? We are looking to trade the market when it is potentially being driven by other time frame traders, specifically higher time frame traders, like the daily time frame traders, the weekly time frame traders, right? And those traders, remember, are trading based on the breaks of daily and weekly candles, all right? And that's why we're keeping track of these levels on our charts, all right? It's when one of these boundaries is broken that we have other time frame traders triggered into the market, and we could potentially see trapped volume at the high or the low of the week, right? Traders trapped on the wrong side of a smart money move, okay? People buying into the high or selling going into the low, right? We want to see certain things, right? Timings, levels, behavior of price before we take a trade. Our highest probability trades are going to be from the peripherals, from the extreme, either from the high or from the low. Inside, when we're trading inside here, your trades are 50-50, right? Because there's not been any real break of structure, a weekly boundary has not been broken, price can do whatever it wants. Everything that you trade in there, there's no way to tell, what it's going to do. You're essentially just gambling with extra steps there and taking 50-50 trades. We want to take 90-10 trade setups, right? We're waiting for trade setups. And those are going to happen at the extremes of this range. You understand? So you don't even have to look at your chart. You could put a price alert at the high and at the low and just not look at your charts until those levels are broken, seriously. And sometimes, and this is what I'm going to leave you with, sometimes we will trade inside of that high and low of the week. All right. But you need a 3-session setup. Okay. Just like Tuesday here, even though Tuesday traded inside of Monday's high and low range, you can see that we still have a nice sell high opportunity at the 10:30 hour going into the New York session. Now, why would we trade this? Remember, we enter trades from 3 levels: the high of the day, the low of the day, or the previous day's closing price. And you can see that right here at 10:30, we pop the top on this market. We trade back into this peak formation high from Monday, right? But we are at the extreme on the day. We are at the high of the day in the New York session, okay? And we break out and reverse, all right? And we'll take a closer look at that so you can see exactly what it is we're looking for here, okay? But this is the 10 o'clock hour, and then this is 10:30. You can see we have 1, 2, 3 pushes back into this high. Here's our micro M formation, the engulfment, the pattern within a pattern. We're inside of a larger M, right? And here's our micro M, small engulfment, large engulfment, okay? This was a good 3-session setup on Tuesday, right? I did not trade this. Like I said, I'm waiting for the new year. Tomorrow's going to be our first day in that Discord. I'll be there from anywhere between 8 and 9 in the morning, Eastern Standard Time. But with this video, I'm trying to point out to you how we use Monday and Tuesday. Monday and Tuesday give us that high and low of the week. We project those levels forward. That's our box, okay? And we want to trade at the extreme or on the outside of that box. That's where we look for our setups, right? Anyway, man, until next time, I hope you continue to free your mind.